Monday, January 29th, 2024, Monaco 64, home of alternative economics and contrarian views. So we're going to look at the Fed today briefly. They're meeting this week. They're going to announce their decision on Wednesday, the 31st of January. But it looks like they could be ready to kind of point towards a pivot. So we're also going to touch upon the geopolitical situation, the crisis situation. And what do I mean by that? Well, it seems like every 2 years now, since 2020, we have some kind of big crisis that evolves. And I think whatever happens this year will probably give the Federal Reserve and the US Treasury the excuse to spend and print even more, like they haven't done that much already. And what do I mean by a crisis every 2 years? Well, we're well aware of what happened in 2020 and with the COVID crisis, and I don't have to go through all the details of that. Suffice it to say, it's something that the powers that be at the World Economic Forum, the Democrats here in the UK, both parties really continue to exploit and continue to kind of connect with other crises, like the climate crisis, which, of course, in my opinion, is bogus. And yes, and many other things, of course. Now we're getting the situation in the Middle East, and we're seeing the situation vis-a-vis Iran deteriorate. We had recently the death of these three U.S. Soldiers in I think Jordan, and the U.S. is blaming the Iranians for it. So, and we can pick a lot of other crises going on out there, like vis-a-vis Taiwan, vis-a-vis Venezuela and Guyana. What else? I mean, the battle for supremacy, let's say in Africa, between the BRICS and the West. I think that's something people don't look at too much, but that's another thing that the West is fighting for. I think, unfortunately, the West is in its final stages. I mean, the rest of the world has lost a lot of faith and confidence in the West, especially the United States. And what we're seeing is end of empire, Thucydides trap, so to speak. What's the Thucydides trap? Well, it's when an empire is fading away and it does everything it can to stay an empire. Wars included, other crises included. So yes, here we are, 2024, and as I said, it looks like it's every 2 years. So I think that fits in as well with what's going on at the Federal Reserve. There are a lot of things that are pointing to maybe a pivot, another round of QE, more QE coming eventually for the Fed, even though they have QT'd. They've wound down their balance sheet, even though since the beginning of the year, when they first came out with statistics about their balance sheet since January 4th, the balance sheet has barely gone down, so it's kind of bottoming. We've got the reverse repo probably is going to drain, go to zero by March. We've got the BTFP running out 11th of March. And even though the US Treasury has been issuing a lot more short-term paper, i.e. Bills, which are from 1 week to 1 year Treasury bills, instead of issuing more long-term paper. And that has actually made it so that the Treasury is conducting monetary policy, because it's helped long-term yields come off a little bit since the end of September. But I think that's all going to end, and the Treasury is going to be in trouble, because like all the countries in the West and even China, they're borrowing like drunken, spending like drunken sailors, borrowing, like they have thousands of credit cards, 2 trillion deficits a year. So I think the Fed's going to be forced to help them. And how do they help them? Well, they create reserves out of thin air and they go into the bond market, into the Treasury market, and they buy the next day after an auction, after the primary dealers buy treasuries. They'll go and sell it to the Fed for a little profit. So the Fed can say, well, we're not buying directly from the Treasury, but it's as good as it just gives the bankers even more profits because the bankers are the primary dealers. So that's what I'm seeing here. It's all pointing towards more accommodation. Yes, we've had about almost 2 years of tightening and neutral policy. They had to do it, of course, but in a fiat currency system, you can't stop inflating or increasing the debt because you never have enough debt and currency out there to pay the interest on the debt, the principal, and with bond yields higher now, interest rates higher, it's even worse. So the other thing I would say, with the drums of war beating even louder, we know historically, or at least I've spoken to you over the years, that wars usually create a lot of uncertainty in terms of supply chains, commodities, everything. It's a lot harder to deal with other countries. Trade is disrupted, and what that does, it creates shortages. And the other thing that happens during war, governments have an excuse, along with the central banks, to print or inflate even more. So that's why I don't see any other way for gold and silver. And yeah, I don't see any other way for fiat currencies. They're going to continue to lose value versus real money, gold and silver. And why is that? Well, because gold and silver have been money for thousands of years, and they hold their value relatively well, or even very well, compared to fiat currencies. And in times of war, it always happens, and even after the war. So, and that's why I continue to stack gold and silver. I told you guys yesterday, if you were on my live stream, that I just bought another kilo bar of silver. So that's why I think it's good insurance. It's good to be outside the system. Not completely, of course. It depends on your risk appetite. So back to the Federal Reserve. Yes, they're meeting. And with all that I've told you, my feeling is that yeah, we could see something big, not just from the Federal Reserve, but also from other central banks. And along with the governments, they've done everything they can to kind of mask the inflation through, of course, statistics that don't really measure inflation, but people look at it as inflation, like the CPI. Here in the UK, almost 2 years ago, they changed the methodology for calculating the CPI. So it's a lot higher than they're actually telling us. I'm sure they've done the same in the US, and they've done it for the last few decades. And the Fed doesn't even look at the CPI. They look at a phony statistic called PCE, and they don't even include food and energy. So why do they do that? Well, because they know they have to keep inflating to keep the fiat currency game going, to keep Wall Street's profits up. Yes, the Fed's purpose is not to help you, it's to help the big banks and corporations. But what I'm seeing as well is the people who covered the Fed, and specifically this guy here, Nick Timiraos, who works for the Wall Street Journal, he's seen as the mouthpiece for the Federal Reserve. And what does that mean exactly? Well, when the Federal Reserve feels that the market and investors are not really getting their message, their propaganda, their narrative, they go to this guy and he tries to tell the public, or investors who read the Wall Street Journal what's really happening. So this is what he said recently, so 13 hours ago, roughly. The Fed is set to retire its tightening bias at its policy meeting this week. Officials have a first-class problem. Inflation fell faster than they expected. You see, they're like pushing this thing that inflation is falling. But tell me about your cost of living and how much it costs for you to do things, especially for the common person, in their ivory towers at the Fed and on Wall Street. They don't care about food and energy prices because it doesn't really matter that much for them. But it poses a conundrum, nevertheless. How soon and how and fast do you dial back restrictive policy? Um, and the other thing as well they're talking about is that this core PCE has fallen faster than the Fed was forecasting, so that will give them some room. So I think they're definitely leaning towards a pivot, looser monetary policy, and that will only put a rocket up commodities and general commodities and monetary commodities. And by monetary commodities, of course, I mean gold and silver. So with that, let's quickly go and look at where the markets are this morning. Of course, as many of you know, I am in London, and I always tell you the time so that if you watch me later and the markets are completely different, you will know that I was talking, before. So it's 8:30 a.m. London time. So I'm gonna enlarge here. We're gonna look at what's going on. Spot gold is up about, just under 0.75%. We're trading at 2,032. High's been 34 and the low is 18. Silver is fighting for 23 here, the 23 handle. The high's been 05. I'm sure, the bankers are going to make it hard for silver to break out, but eventually, silver as well is a very strategic metal in times of conflict, especially war. So I think it's a steal, silver, and that's why I added on a little bit yesterday to my silver stack. So yeah, we're trading at 23, up 20 cents. Low's been 77. You can see the stock market futures, the Dow here, or Wall Street as they call it in this system, is virtually unchanged. NASDAQ is up a little bit, 0.25%, and the S&P 500 is up, just a couple of points. In the UK, you can see the FTSE is unchanged. The Euro Stocks 50, that's unchanged as well. Currency-wise, the pound is unchanged virtually here. You can see 127.11. The euro is down slightly. Dollar's down about 0.2 versus the yen. Dollar Swiss as well is down 0.2. And the dollar is up slightly versus the yuan at 7.19. We can check some of the other currencies. We've got the Aussie dollar up 0.33% at just below 66. And the dollar is down 0.14 versus the Canadian dollar, 134.34. We'll scroll down here and check the Kiwi. Where's the Kiwi dollar? Here we are. Okay. Kiwi dollar up 1/3 at 61.12. So let's check the commodities. Not surprising, we've seen crude trade even higher than where we are right now with the situation in the Middle East and Iran, Yemen, the Red Sea, Israel, Hamas. Take your pick. WTI is up 1/3 at 78.20. Brent is up 0.25%. Yeah, comfortably above 80, of course, at 83.20, and that's always been like a key support there. Um, High grade copper as well, creeping up, even though it's down a little today at 386. And platinum, that's pretty much unchanged, trading around 915 or so. To finish off, let's quickly look at the US Treasury market. So you can see here the short-term rates are still well above 5%, the one from 1 month to 6 months. That's because yeah, the market expects the maybe the Fed to start cutting towards the second half of this year. The 2-year yield this morning is down 2.5 basis points at 434, and the 10 year is down 4 at 412. So that's what's going on. A lot to digest, of course, but I think the my key message is generally in times of global or geopolitical uncertainty, especially with all the stuff that's been going on the last 4 years with what's going on vis-a-vis the West and BRICS. The world's going to get more and more uncertain, and that's going to hurt the trade part, the economic part. And yes, it's not going to get better until we have some major, how can I say, re resolution of what's going on in terms of geopolitics. Do I mean an end to a big war? Hopefully not, but up until that happens, I think we need to be really cautious in terms of where we keep our savings. And at the same time, though, live one day at a time and enjoy life, and don't let all this stuff scare you, because that's part of the game. They want to keep you divided and scared, but you need to keep going and do what you do best. So with that, I'm going to wish you all a very good day. Take care. Bye.